couple items on Chapter 6 and this nonprofit set-aside reasonable period piece. Colin is going to get into Chapter 8 and eligible basis, which I think a lot of our listeners would be interested in more than what I have talked about on the nonprofit set-aside.
All right, Chris, thanks a lot, and why don't you give your throat a rest and take a little power hit of coffee here and we'll get going here. So I'm going to be talking about Chapter 8, which is eligible basis, and we start off with a cutout from page 8.1, and basically this we included just because it defines what eligible basis is by reference to the definition of residential property that was provided for in the tax-exempt bonds in the Treasury regulations. We also note that the definition is cut off prematurely in the guide, but can be found in its entirety at the referenced Treasury regulation. So moving to slide 8.7, or page 8.7, this basically provides guidance on preparing cost certification reports. And basically two takeaways there are you should be including all costs that you incurred for two reasons. First of all, without understanding all the uses, the agency may think that the funding gap is actually smaller than it actually is, and may decide to cut back on the amount of tax credits allocated to the project. Also, the agency may think that these missing ineligible costs are somehow buried within some larger line item that is included in eligible basis, so you don't want them kind of thinking they're